Historical extremes are the most obvious and simplest levels that every trader should be aware of. The two most important zones are the previous day's high and low of the electronic trading session. We mark the previous day's high, abbreviated YH, for yesterday high, with a yellow line. The previous day's low, abbreviated YL for yesterday low, is a turquoise price area. You will quickly notice that our levels are never just simply lines, but always narrow price ranges of a few ticks wide. The width is always chosen with care and never purely random. We align the edges of our levels with data from the order book and the volume profile in order to have zones of interest that are as relevant as possible. Nevertheless, you should keep in mind that the market usually does not react to the levels exactly on the tick, even if this happens quite often. However, price ranges should always be perceived as just that, ranges. It is always a zone in which institutional trading interest exists and in which we can predict volume formation with maximum probability. However, it is important at this point that you build a functioning trading system around these price ranges and not simply place a limit entry order with a 3-tick stop at the level and hope for the best. As already mentioned, levels and market analysis initially only tells us where we want to trade and see increased opportunities, but not what we want to see there. You can combine our market analysis with a variety of trading approaches and systems, for example, with order flow trading from the order book. Back to our historical extremes. The previous day's high and low can not only provide us with zones for possible trade entries, but also reveal a lot about the context. As a general rule, a market that has clearly broken and left the previous day's high behind, it can be considered bullish, and you are better off taking long trades. The opposite applies to the previous day's low. Other extremes that we plot, if they are relevant enough, are the current weekly and previous weekly extremes, as well as the high and low of the previous day's cash session, that is the regular trading hours of the previous day in the corresponding market. However, we always want to see confirmation from the order book as proof of their relevance, especially for the latter, in order to plot them so that we can be sure that the market will react to them again today.